Hey guys, welcome back to yet another episode of Market Structure Analysis with me, James Pakion, and this is Pakion FX. So guys, we are looking at our favorite pair, of course, GBP USD. And as you can see guys, the US economy has actually been going pretty well because currently it's falling, rather the currency pair GBP USD has been falling since I think last week. And yeah, so let's get straight into the analysis. As you can see here, we are currently looking at the day time frame, and last week we were actually looking at how the currency pair was reacting around this particular area of interest, which is actually a confluence between this particular trend line, which marks our, let's just zoom out and see. As you can see, this current particular trend here was an upward channel, and we had actually retested a point here, went back, retested it again, and since then we've actually been falling and falling. Even though there have been several fundamental announcements, but this currency pair has actually generally been falling since early last month. As you can see right here, we were currently in an upward ascending channel, but we have broken out of this particular trend line right here. So let's just go back into the daily time frame and look at how the market had reacted. So it retested this particular point, had a movement to the upside. It found resistance right here at this particular point of interest, and it fell, broke out of this trend line, retested it a couple of times. It kept actually ranging around this area for quite a while before eventually retesting the final time and going down. As you can see right now, it's continuing to drop. So this is how the currency pair has been reacting, and as you can see, the market always respects particular structures. Trend lines are always respected, and also we have this this is actually a 50 moving average. This other one is a 200 moving average. So now the currency pair has gone below the 200 moving average, and so all the particular market movements that we're anticipating to look at this point will actually be mostly sells. So yeah, this is a very good correlation right here. So once the market finally failed to break above this particular trend line, we have witnessed a beautiful movement to the downside. So let's just go down to the 4-hour time frame and see whether we can see particular candlestick patterns here that will help us identify how the market was behaving. And yes, as you can see here, we have a very beautiful candlestick pattern that shows that there was a clear rejection at this particular area of interest. And as you can see, the accuracy here, it literally touched, it never broke above the trend line and continued to move downwards. It finally managed to break below this particular area of interest here, which was acting as a support for quite a while and has been moving downwards ever since. So as you can see here, we have the correlation of this particular moving average. So once you see this candlestick pattern, you should be positioning yourself to take a particular sell, and depending on how your strategy has been set up. So for me, I will actually look at this particular candlestick pattern and know that we are anticipating a sell. Also, this other correlation of having the 50 moving average moving below this particular point, or rather the currency breaking below the 50 moving average, is another clear indication that now we are moving to the downside. Another correlation that we look at is how the currency reacted around this particular area, and as you can see here, we have a beautiful candlestick pattern. So once we had this movement to the downside, it tried to retest, it touched, or rather almost touched, the 50 moving average and formed a nice bearish hammer candlestick pattern. And from now, the only movement that we would have anticipated in between these two particular zones would be a clear sell. As you can see, the moving averages have already crossed above this particular structure. So now let's just see, in between this particular range and this other range was a movement of about 121 pips. So that would have actually been a very good setup to be able to make money off of the market. So as you can see, a continuation pattern right here, another formation of a nice bearish candlestick here, hammer, and the market continued to move downwards. So this will be another very good place to stack in a trade. So if say you had entered here with a lot 5, you could have entered here with another lot size 2.5 and moved your stop from this area to around this area, and then let your trade run all the way down to this particular resistance. So today we've actually observed that the market has broken below, rather it broke below this particular support and it retested it. But as you can see, the formation of this candlestick pattern, another beautiful bearish hammer, and the movement from then was a beautiful around 50 pips. So that would be another place to stack in your trade once you observe that the market had broken below this particular structure right here and formed this particular candlestick pattern. Then it indicated that there was exhaustion and the buyers were no longer willing to get into the trade, and most buyers had actually turned into sellers. So we can actually see that the market broke below. It retested it a couple of rather it retested the market structure again and has been moving downwards even more. So as you can see here, we already have a setup in place, and yeah, let's just see how this trade goes. So far so good. When you look at the 30-minute time frame, you will see that the market has actually broken below this particular level, has tried to retest but has formed another bearish hammer. So this indicates more of a continuation, and we'll continue to see what the market does. In my anticipation, I see the market retesting this particular area, which is level 1.3565, because that particular structure has been retested multiple times. It could start with this area, level 3576. Let's just draw this line here, which indicates that it's been retested once, twice, a couple of times. Let's see whether it's been retested again. Let's just go much further out into the weekly time frame and see whether we can see any retests on those particular levels. I think this is too far behind, but we are hoping to see the market move towards this particular area that has been retested a couple of times. So basically we can draw this as a zone and just check how the market will be behaving when it gets around this area. Yeah, so around this area between level 3576 is where we are expecting the market to finally find some sort of resistance, or rather support, and be able to react and probably move upwards a bit. So let's just keep watching how the market behaves. As you can see, it's continuing to go even lower. So let's just hope that this trade plays out as we've analyzed it, and yeah, keep it locked here at Pacquiao FX. Will continue to drop such videos, and I hope these videos have actually been helping you guys to be able to break the market more easily. And yeah, subscribe if you haven't already, and stay tuned for the next episode.